Stephanie, I wanted to start with what's happening on the Robinhood platform, because you certainly have a certain segment of the investing population. What are you seeing on Robinhood right now?
We're seeing still net buying, but it's been more muted, I'd say, than it was before. And it's been in some of the things that have been going down or had, like Netflix, for example. You've also seen where there's been sales, it's been more in the AI-oriented names.
Okay.
So I've kind of shared this before, but our customers tend to hold core positions and trade around them, meaning they buy when they go down and sell when they go up. But we're seeing a little bit differently, where there seem to be like being more subjective about what they're investing in. And that's why I say, like, it was kind of interesting to see NVIDIA being sold and, you know, things that are kind of under pressure.
So selling rather than selling as they have gone up a lot and taking some profits, they're selling as they're going down.
Yeah, but they probably have embedded profits because they've held them all year. So I think that's like kind of giving up a little bit on the AI trade for now.
Well, like, I totally get it. Like, you know, Tim and I were talking about Oracle. Like, it is still up almost 14% year to date, but we've seen a more than 40% decline from some of when it hit a record back in September, excuse me. So, I mean, how much can you dig deeper into the data in terms of what you're seeing? Is it Mag 7 names that people are getting out of? Is it all tech? Is it just AI related? Like, what are you seeing?
It's just the AI related that I've seen, and then some of the like CoreWeave, you know, those kind of names are
the
like
neo cloud
names.
names.
Exactly. You've also seen some buying in just broad-based ETFs and some T-bill oriented ones that like kind of make me feel like diversification, you know, kind of parking things rather than trying to pick.
So less playing the market and more like long-term diversified index funds?
I think for now. Wow. Usually we see that activity when there's a big dip, like they go into ETFs first and then they play the differences in names.
How are they playing this? I don't want to call it a crypto winter yet, but we're down another 3% on Bitcoin, hovering around $90,000 per Bitcoin right now. How's that played out over the last couple of weeks?
In the stocks, I've seen actually some buying in like the MicroStrategy names, but on the crypto side, I've actually seen more selling than buying.
Interesting.
Yeah.
So instead of actually holding the patterns that you're seeing, instead of actually holding the cryptocurrency, people are instead putting money into the proxies or the hoarders.
Yeah.
Okay.
I mean, if you can make that relationship, I kind of look at two different dashboards, like crypto versus, but I did think it was interesting to see buying into the equity related.
Yeah, because certainly strategy has had its own set of challenges. Yeah. Okay, so let's back out a little bit and talk big macro picture right now. We haven't had a chance to speak to you in a few weeks, and given what we heard from Jay Powell, what we just heard from Mike McKee about different views of the economy coming from different people, where do you sit?
I think the economy's okay, actually. Like, I think this is totally anecdotal, but my feeling is that like New York City is busy, travel is a lot. Like, I actually think the consumer's generally okay. That being said, the lower end consumer is still not doing well, and I don't think they've been doing well for a while. So I do think things got overvalued market wise. So I do, and I also think that the Fed is caught between a rock and a hard place, because you do have this explosive growth in the AI trade, growth in credit markets, and so they have to kind of worry about that being overblown and that creating increased inflation. Obviously, we don't know what's going to happen with tariffs, but that's creating an issue for them too. Then you do have the lower end consumer that is still struggling. So it makes me think of like Europe post 2008, when they had to worry about like Spain versus Germany. And so that's why I think there's so much of a debate within the Fed. And, you know, Powell did say, like, don't even look at the data that's going to come out next week.
Do you agree with him?
Who doesn't? Yeah.
I worry about the quality of it too, like in general. So
I want to ask you about, I'm looking, you know, we're almost at the end of the year, so we can look at the S&P 500, the major industry groups, and see what really did well or didn't do. I mean, communication services names, 31% higher, information tech, 23%. So even though, I mean, the Mag 7, even if we start to see, you know, pullbacks on some of these names or the AI trade, still outperforming. Industrials up almost 20%, financials up 13%. I'm looking at the S&P Composite Pharmaceuticals Index. It's up almost 21%.
Finally now, yeah.
Yeah, finally, exactly. So I'm just curious, what else can you dig deeper in a year where we've talked so much about AI, we've talked about rare earths, we have seen some, you know, M&A activity going on. what is it that you have also seen that are interesting, and you can get an idea of what investors are interested in and what they are not interested in?
I've been bottom fishing. Like we've been, I sorted like the Russell 1000 into, top and bottom players. And it just felt like there was a rotation that started on October 29th, which was when we had that like 6% pullback. And a lot of those names, like of the top 100, the ones that are up the most, 100 most this year, 41 of them are in a negative return since October 29th. So we've been kind of looking around being like, where is there still growth? And I actually think like the other thing we've been doing this year is investing in alignment to fiscal policy, because we do think like what the Trump administration is doing is important to understand. And I think the consumer is going to be more important for them this year. Or coming into next year, I should say. And so we've been looking more in like the retail space of players that are interesting. And so
retailers, which have been reported.
And brand names in retail, like On Holding, Lululemon, like they're down, they're down double digits this year, or maybe not On after yesterday, but
Lulu is for sure.
Yes, there is down 50%. It's up 10% or so today. And so we just think like there is value to be found there while we wait to see what happens in the tech world.
But on a Lulu, for example, doesn't a lot of that depend on who the next CEO of the company is, and they don't even know who that's going to be yet.
There is execution risk there now for the CEO, with obviously the change in the CEO. But I think it lost some shine on its brand, and I think they have done a lot to try to turn that around. And you've seen that in Gap this year, which is also like, I think they're further into that journey. But I think it actually creates an opportunity.